So we are looking at the budgets to prepare. And in the budgets to prepare, we have two broad categorization of it. We have the functional budget or the departmental budget. Every department will have to do something. So the functional budget or departmental budget. Then we have the master budget. Master budget. The master budget comprises of cash flow, profit or loss, and the financial position, statement of financial position. All right, what we used to call the balance sheet. But when it comes to the functional budget, we are going to start the preparation of the functional budget from the sales budget. So we will do the sales budget. They are the first people, the marketing people are the first people to give us what we need to produce. So the sales budget will be done. From the sales budget, we will be doing the production budget. Production budget. Because once the marketer tells the entity how much they need, then we put it into production. And in production, you know the factors of production. So we will need raw material budget. Now, in the raw material budget, we will need the raw materials required. You have to do the raw materials required or raw materials requirements budget. So how many raw materials will we need? So we will do raw materials required budget. And this one, it will be in units. Sales is in units, but if you multiply, you get your value. Now, if we know the raw materials that we require, then we will have to prepare the raw materials to purchase. The raw materials to purchase budget. So raw material purchase budget. The difference is not that much. When you know the units, you multiply it by the price per one, then you get the value. So we will need that. Then, after we've gotten the raw materials, it is not only raw materials that we use to produce. We have learned that thing through the marginal and absorption costing and stuff, that after raw material, you need labor. So we will have to prepare the labor budget. So in terms of the labor budget, the same thing, we will need the labor hours required and the labor cost. So labor hours required for the job. And the labor cost. So if we know the hours, we can multiply it by the cost and we will get what we need. Then lastly, when we do raw material, we do labor, the next thing we do is the overheads. So labor budget and the overheads budget. So we will need the overhead budget, and here we will come back to our overheads absorption rate, the same thing that we learned. All right, so we will need the fixed overheads budget, and we will need the variable overhead budget. So these are the budgets we need to prepare. You could see clearly that so the overheads we have, the factory overheads, you've seen what we have done. You could see clearly that if it is like a P&L, this side will be your sales. This side will be for your sales or revenue, like the way we were doing the marginal and absorption cost. And this side will be the production. So opening stock, add production. This will be our production, like our cost of sales. All right. So after that, if you have your cost of sale, then you also need to prepare the selling and distribution expenses budget. So that is kind of the non-production overheads. Okay, so after you have done with your production, you come to your non-production budget. So we take a look at selling and distribution overheads budget. Then you also take a look at your general and administrative expenses overhead. All right, so these are the budgets we will need to prepare. When we finish everything, we will now prepare the master budget. So basically, that is how this side operates. So now let's start preparing. So my objective for this lecture will be to be able to prepare everything functional budget. All right, and the functional budget starts with the sales budget. So let's start our class with number one, how to prepare the sales budget. The sales budget. So how do we prepare a sales budget? A sales budget is just the budget for the expected revenue. That is the focus. We are using it to get our expected revenue. So the only thing we need in the sales budget is how many units should we produce and how much will we get from that. So the elements we need is the sales units. We need the sales units, the units to sell. Then we will need the selling price per unit. And when we get these two together, we will get our total revenue. So that is how simple the sales budget is. All right. Now, understand that there are certain things that affect the sales budget, some theoretical things, and we will take those ones from the manual. So now let's go to how we can practicalize, how we can prepare. Let's just take a look at how we can prepare our sales budget from a question. All right. How do we prepare it from a question? So all we need is only two things, right? We need the units and we need the selling price. And these things are provided by the question. All right. So it is very easy to prepare a sales budget. Okay, so let me go to the pages of budget. Pages of budget will be around, let me say page. Okay. All right, so this is the sales budget. Like I was saying, there are factors that affect the sales budget. Historical sales data will tell you whether you can sell more or you can sell less. The market trends of demand also will affect it because we need to know how much people are willing to buy. Economic conditions, are the salaries of people good so that they are able to buy more. Competitors' activities. What are competitors doing? If competitors are doing things, reducing their prices, we can't match, we can't sell more. All right. And organizational capacity and marketing plan. So if you have huge advertisement orientation, then it means you can also produce more. All right. So that is that. So the sales budget is very, very important because it assists us in the production that we need to do and our inventory planning, and also to know the cash flow, all right, that we need to keep. So let's take a look at this example and prepare a sales budget from that. Don't forget, in the sales budget, in the functional budget, everything starts from the sales budget. So, and the sales budget, you need the units and the selling price. So that's all you need. So now look at the question and tell me what we need to do. So we have a company makes two products, X, Y, GT. It says that the sales for the next year budget is 5,000 for. So here the PS you see is XY, and the GT is for the GT. So this thing is supposed to be XY. All right. So that is that. You may see some of them like that. You just have to correct them. I've already corrected them in the new book. So it says that planned selling prices are 95 and 130 respectively. So if we are to prepare the budget, what do we need? So we said that we need what? We need the units and what? The price. Is that not it? So now, if we are to prepare this one and we pick product XY and GT, the sales budget is just simply going to be the number of units. So for XY, it's a 5,000 units. And for GT, it is 1,000 units. And we say that once we have the units, we need a selling price per unit. In this case, this one is 95 and this one is 130. So what will be our answers? This one is clearly 130,000 cedis, and 95 by 5,000, that one also gives 475,000. All right. So basically that is that. This is sales budget, nothing difficult, very simple. All right. So basically that is that. So now what you are going to do is to do this question for me. The B. The company makes a product A and B, and be very quick with that. Very, very quick with that. All right, let's do it together. Give you a question for you to do. A company makes two products A and B. The products are sold in the ratio of 1:1. So it means that they are sold in the ratio of 1:1. Planned service price, selling prices are 100 and 200, and the company needs to earn 900,000 of revenue in the coming year. That means that for the two products, so it needs to earn 900,000. So we have product A and we have product B. The total revenue from these things should be 900,000. But we do know that in sales budget, we need the units, the sales units. And the sales units per this question, we don't really know. We don't know. But we need the selling price per unit. That we know. We are told that A is 100 and B is 200. We are told. And so the total values, here we don't know yet. Here we don't know yet. But we know the total for the two to be 900,000. That is what we are told. All right. So in that case, what can we do to find the figures? Now, you are told that they sell the product in the ratio 1:1. We are told that they sell the product in the ratio 1:1. So it means that the quantity of the product. Now we know that we have 300, 200 and 100. That put together tells you that the price we are going to spend around a 300 Ghana cedi for the two. That is the indication. And since the product is sold 1:1, it means whatever quantity we will have here, it should be equal to the same quantity we will have here. So basically, that is that. That is that. So what can we multiply with this one to get an answer? The same value we can multiply. So here, if here is x, here too will be x because it's the same thing, 1:1. So if that is the case, if you multiply, we are getting something like 100x plus 200x is going to give us something 900,000 cedis. So if we have 300x being equal to 900, then what is x? What will x be? Here is 300. Here is 300. X then will be equal to 3,000.
3,000.
Yeah, so that means that this side, the A is 3,000. Then if A is 3,000, then B is also 3,000. So in that case, we know that here it will be 300,000 and here will be 600,000 cedis. So that is how you do the working to get your figure. As simple as that. So you just have to follow suit with what the question tells you and do. So that is how you do sales budget. Any question on that? It's very, very easy, right? So now we come to how to do a production budget. What to produce, production budget. Remember, the units we are going to produce are what the salespeople tell us. So we take that one from the sales budget. All right, we take it from the sales budget. And so production budget is going to produce what the salespeople want. All right, what the salespeople want. Okay. So now, when you want to do your production budget, this is what you will need. You will need the sales budget, so the budgeted sales unit. You will need that, the budgeted sales unit. Then you will add your closing inventory. So the closing unit, the desired budgeted closing unit. Then you will subtract the budgeted opening inventory. So that is how you know the number to prepare. So the production unit. So very simple procedures. It's in unit. So basically that is that. So the budgeted sales. So if your sales is wrong, then it means this one too will be wrong. That's the danger. All right. That's the danger. So why do we need to do this budget? So that we will know the exact quantity to produce, so that we don't do overproduction. And so also that we will utilize the resources very, very well. All right. So that is that. We don't do understocking and overstocking. All right. So basically that is that. So these are the things, the importance. All right. All right. So also check your production capacity and look at the variations in the sales and the demand people are making. And also ask yourself, do you have the resources to actually produce it? All right. So these are the considerations. But let's look at how we work, we do the production budget. So I will do one. I will give you space to also try some as we go along. All right. So we will be doing them. So now look, the same question we did. All right, the same question we did. Now we have the opening and we have also the closing. So how are we going to now do the production budget for it? So when we worked it, we had the sales, this particular example. All right, we were given the sales sales unit. All right, so let's see how the production budget will be. So if you take, there are two products. So the two products we have in this one, we have PS and TG. So the same product we were doing. All right. So How many are we going to do? So we will start with what? The sales budget, right? The units. And this question repeated the units for us. So we were told that this one will be 5,000 units. And this one will be 1,000 units. Then what do? You add which one?
Closing.
Closing inventory.
Closing.
So the closing unit. What is the closing unit? This one, PS is 1,001, right? 1,001. And this one is how many? 50. Then we less opening. The opening is 100. This one is 50. So that means that our production, budgeted production in units will be what? We will have 6,000. Is that not it? 6,000 units, and this one will still be 1,000 units. I hope it is not difficult. Is it difficult?
No.
Yeah. So from there, now that you know the template, let's now go to how we do the materials. You know the materials, I told you that the materials, we have two. We have two of them. So when you look at it, we have the materials required, all right, and we have the material purchase. So the required, you will see the number of materials you will need to produce the product that you want to produce. So that's how the required works. So you need the quantity that you will need. After you've gotten the quantity, then what you are going to do is that you are going to be buying them. And so once you get it, then you multiply them by the price in the market and you buy them. So how do we do the materials budget? So this one was number 2, production. So let's go to material. So now we know from here the budgeted units that we want to produce. Now, if we want to produce 6,000 units, what is the raw material quantity we will need to produce that? So we look at the material units and the components, the material required, the components there are the same. The materials required is the same. So you will have to find out the the same template that you have done here. So let's say material requirement. So materials required budget. It's just like the production one, the same procedure that you go through. So you need from the production how much you need to produce. You will need that. Now, once you get how much you need to produce from the production budget, then you have to find out the number of the quantity of materials that you have to be multiplying it by. So it means that, first of all, what you will need in material requirement budget is your production unit. You will need your production units. All right. So take a look at that, the production unit, and we have done that. So you get the production units down, and the production unit is what you've had, maybe like from here, all right, for that particular product. Then the raw materials, the number of kg that you need. So you multiply it by the raw materials per kilogram, all right, so that you know the total number of raw material you need. All right. So if you know your production unit and you multiply it by the total number of raw materials that will be given to you, then you know what. So materials per unit. So you get your production unit, you multiply it by the materials per unit, and therefore you get the total raw materials. That is it. It's very, very simple. So if you get a question, get the materials, multiply it by the production unit, you get your raw material usage budget or required budget. Another name for this one is usage budget. Then once you're able to do that, then you will need to prepare the raw materials to purchase, the one to purchase. So raw material purchase budget, raw material purchase budget. Maybe you have some of the raw materials there already. So the purchase budget goes just like the production budget. That is how it goes. It goes just like the production budget. So that one too, you need the raw materials required. This one that you have done. So you need the raw materials required or usage, the units that you did. You will need that. Then you add your closing raw materials. Closing raw materials. Obviously, you will less what? Opening raw materials. Opening raw materials. Then you get your raw materials to purchase. And when you get the raw materials to purchase, you now multiply it by the cost price, the cost per unit. Then you get the amount. So the raw material purchase amount in value. And these things are very important because when we are doing the master budget, you may have to be doing this thing. And let's say if you buy this thing in credit and you pay in 2 months' time, then in the cash budget, you shift the payment from that time you are standing in into the second month. So that is how it will be. So you need to understand how this one operate. Now let's take a question and look at it. Let's take a question. Of course, it is important so that the theoretical aspect is very, very important. All right. So it ensures uninterrupted production. You know that you know the materials levels that you need. So you are always having it at any point in time. All right. So, and it also lets you know the material cost, because if you know the cost and the quantity, your storage expenses too is clear to you. All right. So basically that is that. All right. So now let's take a look at this one. So this question, we have this information, and like I said, this PS is supposed to be XY. All right, so we are supposed to go through and put this thing that we have done into calculation. So let's see how it goes. So right now we have been asked to do the material usage budget and the material purchase budget. So we will set up our products, the products that we have. We have product XY and we have product GT. From the production budget, we know what to produce from the production budget. We will always know what to produce from the production budget. Now, from the production budget, how many units are we supposed to produce? And from here to, we will know the price of each material. So, for example, according to this question, we will need, if you want to produce XY, you will need kg of raw material of X, and you will need kg of raw materials of Y. This 6 is supposed to be here, under here, and the 8 will be here. So these two figures are already in the new book. I've shifted it. So that is that. Now, so we already know that per this thing that we are doing, the production budget, so 6,000, 1,000, we need to prepare, because look at it. This is the production unit. It says that they has budgeted to produce, so we already have the production unit. So clearly we have the production unit of XY. Production unit. But in a typical exam question, you will do your own production unit. like the way we did them here, 6,000 and 1,000, and that is what we are continuing with. All right, so we knew that our production unit for this one is 6,000 and this one is 1,000. We knew. All right, so they said that if we can produce XY, we will need raw materials X and Y. Now, the number of raw materials we need for XY. So here, we will say materials X. We will need material X. And the material X, the per unit, the quantity you need to produce one of XY is 12. And so if we now multiply, so for this one, it will be how much? We have 6,000 multiplied by 12, right? And GT2 the same. So here will be 1,000 multiplied by 12. So here is clearly 12,000. That is for material X. And here is how much? 6, 12, 72, right? So that is the number of material X we will need. Number of material Y. They said you will need 6 per kg. So if here we are producing 6,000 and we multiply it by 6 for XY, here will be 36 units, 36 kg that we will need. So kg, these things are in kg, kilograms. And this one, we have 1,000 and we will be multiplying it by 8, and that gives you what? 8,000. All right. So basically that is that. So that is what they are telling us, and that these are what we have. So it means that if we now want to do our raw materials, what do we call it? The raw materials purchase budget. This is the raw materials usage budget. And so if we want to do our raw material, this is the usage budget. If you want to know the raw materials purchase budget, and please be careful, the name is raw materials purchase budget. And so what are the raw materials? We need material X and we need material Y. You see, I didn't put the product on top again. I have changed it to the material because we are doing the raw materials budget. Now, we know that to produce XY, we need 72 of X, and we will need, what do we call it? 12 for 12,000 for TG, okay, so or GT. So that is what we know. So now, in material X, this is the lines for material X, and these are the lines for material Y. So we will say that for producing or for the production of XY, product XY, we need 72,000 of material X. And for the production of GT, the same material X, we will need 12,000. Here, we will need material Y, 36,000, and we will need 8,000. So that is it. So now, the total material X we need is 84,000. The total material Y we need is like 44, right? 1,000. Or in kg, because these things are in kilograms. All right. So that is that. These are the material usage. Don't forget how we do the production budget. The material usage. Once you get material usage, what else do? You add closing inventory. What is the closing? We are told that the closing inventory for material X is 6,000. Is that not it? And that of Y is 1,000. So if you check, that gives you can add, but less straightforward. Less the opening. So what is the opening stock? For material X, it is 5,000. For material Y, it's also 5,000. So what will be the quantity to purchase? Material purchase budget in units. So this one, clearly, this is like 85,000. And this is like how much? 40. Yeah, 40,000. Then we are giving the selling price or the cost price, sorry, for material X to be, so cost per unit, the price per unit, it will cost us 0.72 for material X and that's 1.56 for material Y. Now, what will be the amount? So 85,000 by 0.72. That's 61,200 cedis. And 40, that's like 62,400 cedis. So this is how you do the production budget. The raw material purchase budget. But before we go to so that is it. So before we take a look at the before we take a look at this one, the labor budget, I want you to do this question for me. So let me bring one for you to do. So with this example, all is the sales budget, right? So sales budget, there are how many products? Colorate, pompon, and cat tea. So we needed the units, right? Sales units. So you give me the final figures that you have. This is 4,000. Then this is 3,000.
3,000.
And the selling price per unit are also attached, right? So 100,
Yes.
130, and
130.
150.
150.
So what did you get for your sales budget?
200,000.
The first one,
Yes.
200,000. Second,
250,000. 520,000.
then the last one,
450,000.
450.
Yes.
All right. So the next thing for us to do is to look at the production, right? So this is what you gave me. All right. So using the same product, the same question that you've done above. Now, these are the opening stocks and these are the closing stocks. So go ahead and everyone. So you do the production budget. All right. So do the production, set out the table and do the production budget using the same information. So the only answer that I will require from you will be your final answer, production budget in units. All right, so 5 minutes. Okay, so what did you get for the production? For
the 2,100 for the first one.
2,100.
And the second one, 4,200.
4,200.
And the third one, 3,100.
That's correct. That's very good. So we obtain this thing by starting with our sales, budgeted sales, right? And the sales quantity was, so unit was 2,000, 4,000, 3,000. Then you added closing. So the closing was 600, right? 1,000,
Is 800.
800. Then we less opening. So the opening, this is 500. This is 800. The last one is 700.
700.
All right, so that's very good. That's very good. So now production is done. So this was production budget. So now let's go to the materials. So now that production is done, let's go to the material. So the same information that you have, the same thing that we have been doing. Now let's use it to go ahead, use it to do the production, the raw material. The raw material, don't forget we have the usage, raw material usage, and raw materials purchase. So try that too.
Okay.
By the time those people who are supposed to join the class join, we are long gone. So what did you get for the material usage for the respective materials?
Okay, so say for the thing, I didn't total them,
But you
but
need
for M1,
to colorate. Did you do it like this?
yes,
All right. So the production unit, you had it, right? The production was
yes,
repeated. Your answers here were repeated. So we know that this one you need is this. These are the figures. These are the figures. So to produce this, we are told that you need M1, you need M2, and M3. So this one, the colorate, these are the ones for colorate. So what did you get here?
10,500.
10,500. Uh-huh.
Then for the 4,200,
Which one? Here,
the M2, no, M2 of
M2
colorate.
of colorate, 4,200. Then M3.
Then 0.
There. Okay.
Then
So what was the total? You know you don't add this, right?
yes,
All right. So what would the total be? 14,700. Is that it?
yes, yes,
14,700.
yes.
Right. 14,700. Then what about this? M1 for, so 3 by that. What did you get?
12,600.
12,600. Next.
8,400.
Next.
8,400.
So we put them together. This side,
6,200. 6,200.
mm-hmm.
3,100.
Good work. Last one,
9,300.
very good. So the total for this side was how much?
29,400.
29,400.
18,600.
18,600.
600.
Okay. All right. So if you have totaled these things like that, remember that you will need the M1, M2, M3. So now we are going to look at the materials. And when you are looking at the materials, you know you don't really need this total. You know that.
Yes.
But when you are looking at the material, you need the materials total. So if you pick, because we do the raw material budget with the top being the material. So here will be material 1, right? Material 2 and material 3. So you could probably as well done it like that. Material 1, material 2, material 3, and bring the color rate and the component these sides, right? Could have done it like that. Yeah, that one is even better. Because this one now, you need to now total. We don't really need these totals. These totals is for color rate. But we are doing the raw materials to purchase, the budget of the raw materials to purchase. So you could have done it M1, M2, M3, then bring color rate compound, then cut the, all right, then you total. So that one, with this one, since it's done this way, we will now need to total these ones. So if you total this one, what will you get? This plus this plus this. That's like,
29,300.
yeah, 300. And this one is how much?
15,700.
Then the last one. Is that how you did it? Or we are now looking at it?
No, I did it the next when I was in the purchase
Ah,
budget.
yeah, you see. So if you had done it like that, you could have just picked it straight. So here is how much.
17,700.
All right. So that is that. So it means that the materials that we need. So when we pick the material usage, so here raw material usage, you will need 29,300 here. You will need 15,700 here. Then here is 17,000. So that is that. Then what do we do? You add what?
The
Close.
closing
And you will less
opening.
open. Okay. So now the closing and the opening we were given. So the closing for M1 is 18,000 and the opening is 21,000. So straight up. The opening for this one is 9,000 and the closing is 10,000. The opening here, the closing is 12,000 and here is 16,000. So give me your final figures.
26,300.
All right.
14,700.
Mm-hmm.
13,700.
And you are giving the prices, right? So this is the
Yes.
raw material purchase.
The
So cost per unit. This one is 5,
5, yes,
3,
3, then 4.
then 4. So what were your final answers?
131,500.
131,500.
44,100.
44,100.
54,800.
54,800.
Yes, 54.
That's very good. It means you are understanding the thing systematically. So this is where we did up to, right? Now we now need to learn
Yes.
how to do the labor budget. The labor budget. Okay, so we've been able to go through all these things systematically. We now need to learn how to do the labor budget. The labor budget too, we need labor. It's just like doing the raw material. So the labor budget, you see, after you have done everything, you are going to, you see, you've done the sales, you've done production, and you are doing the others. After you are done, you see that you should be able to prepare a P&L out of it. That will be the P&L master budget. And when they will be making payments, you use it to do cash budget. And you should be able to also do a balance sheet budget. All right. So that is how it should be. Because in a typical organization, everybody must do a budget. And it is good that when you do the budget, you should be able to prepare a balance sheet out of the budget. Okay. So basically, guys, this is real life things we do, not just book knowledge that you are obtaining. It's real life. We do it in the offices. So let's get labor budget. And we are doing this thing for a manufacturing company. That's why we are producing. So the labor budget too, we have the labor hours. All right. So the labor hours usage. Labor hours usage or required. So that one too, what you will need to be able to do that budget is the unit to produce, which you got from which budget?
Production.
Production. Good. Then you multiply it by labor hour per unit. Labor hour per unit. So that's how you will do this one. So it is very straightforward. Then you will do the labor just as we did the material required and the material to purchase. So the labor cost budget. So the labor cost budget, what you will need is the labor hours you have calculated, this one. So you will need the labor hours, the one you have calculated. So let me use this black. So you will need the labor hours. So technically the answer you had here, you will need that. So the labor hours required. Then you multiply that one by labor rate per hour. All right. So basically that is that. That is that. But sometimes from the initial videos that I have done, you see that when you look at labor accounting, there is something like overhead or shift adjustment. So you see that some labor will be doing overtime. Others to you will be paying some form of bonuses to them. So you may have to adjust those ones. And when you are doing these things, you need to be careful of skilled and unskilled. All right. So basically that is that. It comes from a long video activity. So the previous videos. All right. So, but it is not usually far-fetched from budget. But if you get the extreme questions, you will see that. But we will be definitely be doing some of these things. All right. So now, these are what we need. So if you now come to the initial questions that we'll be using, so we've gone through all these things. So this is the labor concept. All right. The importance are there is ensure that we get the right labor. All right. And we go through the proper payroll to be done and all those things. All right. So look at this question. Illustration 8. Now, we are going to calculate the labor budget for the year. And the labor budget, like I told you, you need to do first the labor required, all right? Then second, you do the labor cost. So if you look at the question that is in front of you, the same thing that we've been doing, the same question. And here, good news is that you still have the production cost, the production units that we did. So if you look at it, it says that the same products that we've been doing, the data is given again. And for the finished goods of XY, you need labor hours per unit 8 hours. This one too, you need direct labor 12 hours. And the standard price is this. So first, what we need to do is to do the labor hours required. Is that not it? Labor hours required. So the labor hours required, how many labor hours is required generally? So for product XY, how many labor hours is required? We need the production unit, right? That's what we said. Product unit to produce. So 6,000 multiplied by the hours. So that how many hours? That's 8. Is that not it? So you have 8. So find it. Then GT to the production was 1,000. And the hours you need is 12. So that one is 12,000. So the first one is like 48, right?
48.
So now, in total, how many hours do you need in total? So you put them together, means you need 60 hours, 60,000 hours. Then now you multiply it by the labor hour. So you see that there's no price for like hours. Hours is hours. Whether you are producing X, you are producing GT, there is no hours for GT and there is no hours for XY. Hours is hours, all right? So you can't say you need the hours for this, hours. If the question gives you like that, fine. But hours is hours. So there's no segregation of hours. So how much now is your labor cost budget? Five multi
312,000.
312,000 cities. All right, so this were in hours, you multiply it by this per hour. That is that. So since you've been able to see this, why don't you repeat the process for this one that we have been doing? So now, this is what you are told. The products that we have been producing, this is what you are told. So let me see how you are going to go about it.
Sir, please can you scroll up a bit? Okay.
Yeah, this part is not part of the question.
Okay.
So it is the space we need for your answers. So like I said, if it gives you the for each and every individual, this question we just had one. It didn't give us one for X, Y, and anything for GT. So we put them together. So we also put them together. But if a question gives you separately, you can also decide to do it separately. All right. So go
Okay.
ahead and complete it. So we have the 3 products, right? So color rich, pom pom, and we have the cut. So we said you have to start with the labor required, right? And that one is the production unit multiplied by labor hours, labor hour, labor per hour. All right. So labor hour per unit, sorry, labor hour per unit. And the production, you did it, but it has been repeated. So it's 2,100. That's what you did, right?
Yes.
Then the labor hours, the hours were here. So 4, 6, 8. So what did you get? This one is like 8,400 hours.
Except for the when I multiplied, I got 8,400.
And this one,
25,200.
25,200.
24,800.
All right. So the last thing to do is so this is the required, and you need the hour cost per hour, the hourly rate. You were given this is 8.5. This is also 8.5.
It's fine.
This is also 8.5. All right. So final answers
71,400.
into 1,400.
214,200.
Mm-hmm.
210,800.
All right. So basically that is that. And these are in values, don't forget. Or you can just say labor cost. And you put the CD sign there. All right. So basically that is that. So that is good. So now the next thing we need to learn how to do now after the labor is the overheads. And that is basically kind of the end of the production side. All right. As for the other side, you'll be given. It's a straight figure you'll be given. And so when you finish, I'll give you this assignment to do. I'll send it to your WhatsApp page, and you will do this.
Okay.
You use this one to do. So everything we have learned, have you seen that?
Yeah.
Everything. You calculate all of them. Then you know that you are getting better. Then when we meet again, we are going to focus on how to do the master budget. All right. So, and I'll give you some questions. I'll even give you some questions from Legon Masters, the masters group I teach, Masters in Public Admin, and you will do it. All right, you will do it because it's also an exam. So you practice with it to make sure you are, grounded in that. So let's just look at the labor, the overhead. Overhead is the indirect expenses. That is what overhead is all about. And so we have overheads like the fixed ones. We have something like rent, salaries of permanent staff, the depreciation of equipment, the insurance that you pay. And we have variable overheads. All right. And the semi are also there where you use the high and low system to actually segregate them. You remember the overhead absorption rate, budgeted overhead over budgeted level of activity. A typical example of a level of activity will be the machine hours. So here, what you are going to do is that when you are giving the question, you have to identify all the overhead costs and classify them into fixed, variable, and semi-variable. That's what you do. Then you also get the estimated level of activity, which is usually the production unit or the labor hours. The question will specify it for you. Then you calculate the variable overheads based on the level of activity. So you'll be doing the overheads absorption, use it to do based on the level of activity if necessary. And if possible, you also do the side of your fixed overhead. All right. So it's a very straightforward activity. This one looks a little as if it is systematic and a little cumbersome. But when we actually take a look at it, you see that it is very, very easy. All right. So we are going to practice with this first question. We are going to practice with this first question. So what we need, this is the information that has been given to us. So we just go in there. And as you have been doing the same thing, we will do one together. and I will let you do the other one so that you get some form of grounding inside what you are doing. Okay. So now let's look at the question that is in front of us. The question says that the same company that we have been using in this site, according to the question, we have the same production unit, and the following information in terms of hours has been provided for us. Okay. So now, the question now tells us that the machine hours are here. The production overheads per machine hours too are also given, and we are supposed to calculate the overheads. All right. Okay. So now, what do you do in terms of going around the production overheads? It's a simple thing. If you take the machine hours, it is 8 here, and the machine hours here is 12. So when you are doing, so you say overhead budget. And like I said, you will need a variable overheads and you will need the fixed overheads. So if you pick, for example, the product PS, according to the question, you need machine hours, 8 hours per unit. And we already know our unit, the production unit. So it will be 8,000 units multiplied by 8 for this one, XY. Sorry, I wrote PS, XY. XY. So multiply by 8. And that one will give you about 48. So 48,000 machine hours. That is what you will need. Machine hours. So when you pick the second product, which is GT, you also could see that for product GT, it is 1,000 units, and the hours needed is 12 per unit. So you multiply that one to you have your 12,000. Now, when you put this thing together, when you put the 12,000 and the 48,000 together, you have 60,000 hours, machine hours. So this is the hours that you according to the question, there is. So if you are going to produce, says that production overheads per machine hour, the variable one is given by 1.54 multiplied by machine hour, and the machine hour is this. So the total machine hour, you just multiply by 8. So you have 60,000 hours. That is the variable. You get your answer. So multiply and get me the answer. And the fixed too, it says that it is 0.54 multiply the same by 60,000, because that is 60,000 hours for all. So what will you be getting?
Yeah, the first one is 92,400.
92,400. So that is what you have. See this. Then the second one to
32,400.
32,400. So together you have something like 4,124,800 Ghana cedis. So that is how you do your overhead budget. So the overhead budget, find out what you need per machine hour or per whatever hour. Then when you sum them, you can now multiply by the figure that you have, and there you go. All right. So basically that is that. Now let's repeat this thing in the other examples that we are doing if we have overheads. I think we don't. No, we don't have such yet. So basically that is how it goes. All right. That is how it goes. So the overhead is simple. Just get the total hours that you need. All right. So like we said, get the total hours that you need. And when you get the total hours, so this is what I mean. Identify all the overhead costs, whether variable or fixed. So that is what we've done. We saw that this is what we did. Then estimate the level of activity. The level of activity, as you could see, is the hours. All right. So if you estimate the total level of activity, you calculate the variable based on the level of activity. You are given the price, and based on the level of activity, this is what you get. All right. So you also do the fixed overhead. Then you put them together to get your total. If there is any other variations in the question, then you do. So this is all. As for the selling and distribution, it will be given to you. It will be given in the question. Admin will also be given. So basically that is that. All right. So this is how you go through to do your functional budget. So I'll send you this question 10, illustration 10. So you go ahead and do for all of them. All right. You go ahead and do for all of them. All right. I think after that, there is another question. So I'll send you this question too. You have to look at it. Yes, I'll send you these two questions. So think after that, we can now take a look at our master budget. All right. So that will be it for today. So let me send you the question. You can even start now. All right. So bye-bye.
Bye.